In this video, I will teach you an easy system to track your estimated tax payments in your QuickBooks Online file. All right, let's get started. Now, most people I know are making their estimated payments 90% of the time out of their business account, which is fine, but this is not an expense and it has to be tracked a certain way. And it's not an expense we want to put in your normal distribution bucket. So when you take money out of your bank account, which is perfectly fine, that either goes to what's called a distribution or a draw, which is an equity account. So we need to set those up to track your federal and state estimated payments. Now, even if you are an S Corp, you may still be making estimated payments as well, depending on how high your revenue is. So I'm going to show you and go over how to plan for that. And if your CPA really should be working with you and telling you your estimated payments, but I can show you also how to do a rough estimate. All right, so let's get started here on my spreadsheet. I'll just zoom in a little so we know what the dates are. So estimated payments are April 15th, June 15th, September 15th, and January. So these are the due dates. It's not a perfect quarter. This is a compressed payment for June 15th. All right, so let's talk about what we're saying here, right? So these are estimated payments, and no matter what, they are not expenses. They are equity payments. So let's go set this up. So I'm in our chart of accounts and we have here equity, right? So I technically like to make a distribution or draw account for each year, but we are only talking about right now the estimated payment portion. So I would call it, put the year where you're in, so you're going to put in the year, the name estimated payments, drop it down, go to equity, and I would pick partner distributions. Okay. So one other thing, I wouldn't make two accounts, one for state, one for federal. They should all just go in there. But I'm going to post some payments so you can see where you would go find them. So our first payment was due April 15th, so hopefully we paid it a little early. A lot of times they're set on auto. Like a lot of times my clients, their CPA will give them a schedule. Could also be United States Treasury. You should notate as well which year, because you saw that next one will be in January for the prior year. So we're saying payment number 1. And then the account will be, I'm going to go ahead and post the other payments, and then I will show you how you would find it at the end. Okay, so I've entered all of the payments, and I'm going to first show you where they were in the check register, and then I'll show you where they end up in your reports. So I posted ahead, which is a good idea if yours are already scheduled, right? So I think you can go online to the IRS. And you can schedule them ahead, as well as, you just need to be making sure you post these and actually pay them. But so they're decreasing your bank account and they're going against this 2026 estimated payments. So if you were to run a profit and loss, these will not show because it's not an expense to the business. It's really, if you're an S Corp or an LLC, everything that you do with your estimated payments, if you're paying it out of the business, it's not a business expense that flows through to your personal tax return. So what you would do at year end or any time that you're trying to figure out how much have you paid in estimated payments so far, you want to run a balance sheet. And I'm going to run it as of May 31st, and then I'll future it out and show you how it increases. So it's going to be negative in your equity section because you're taking money out. So you get more equity, right, by giving money to your business and or keeping money in the business. So this is normal. Don't be worried about that. So if we click into it right now, this would have the April payments. So you'll have to say, go backward because of the way this ran. So we'll include this year. And it's showing the payment number 1. Now I did put a description on, but it was in the memo when I was posting it in the checking account, so it's not showing up. So if we go over here and copy this, then it will show up. So it depends on how you're entering things. But this is better if you have that memo because then you know which payments. I watch a lot of back and forth with my clients and their CPAs because a lot of times I'm not going to schedule someone's estimated payments. Obviously, that's a personal account, at a tax agency. But the CPA is having a hard time figuring out if they did make the estimated payments they were told to make and where did they come from and for which year. So this is a good way to do it. You would like in your description to say the year because in 2027 you could be doing your 4th payment. So let me future this out to 2027. And you basically should count out 8, right? 1, 2, 3, 4, 5, 6, 7, 8. So if you're in a state with income tax, there's a couple states that don't have it, but this is how you should post your estimated payments inside your QuickBooks if the payment is coming out of your business bank account. Don't make it an expense. It's not going to be on your profit and loss. You are going to post this to the equity account, and each year you should make a new one, because what will happen is in 2027 you're going to have that one January payment. So that's why you want to make a new bucket every single year. It'll really help you out. All right, I hope you found this useful. Please post any video requests in the comments and like this video if you found it helpful. All right, have a great day.